It's 9:30, so you know what we are doing, watching the markets very closely today after a down day on Friday where all three major indices closed in correction territory for the first time since March, wait for it, 2016. Right now we're looking, yikes, and things are down 150 already, just 50 seconds into the trading day. Joining me now to discuss three of my faves, CNBC reporter Dom Chu, Felix Salmon, Axios' chief financial correspondent, and Bill Cohen still with me. All right, Dominique, to you first. We only got 2 weeks left in a year. S&P is now down almost 3%. It's the year no one made money, in spite of the fact that if you ask people around the country, the president convinces them that he's the markets guy.
So he is a markets guy, and the reason why it's so important is because since the beginning, President Trump and members of his senior administration staff have all talked about the idea that the stock market is one of their big gauges that they watch for how the economy does, the judge, jury, if you will, on what happens with the presidency and how he's doing it with his policies. Now, the interesting part about the action so far this year is that it really has been up and down. We have seen, remember, record highs just about a couple of months ago. The sentiment really changed over the course of just, say, September to maybe early to mid-October. And that's when there was this notion that all of these fears over things like global growth, the trade and tariffs issue, and everything else have really now started to come to a head. Remember, after 20+ percent returns last year, and now we're looking at flat to slightly lower returns this year. If things stay the way that they are for the next couple of weeks, it will still average out to a decent return over those 2-year span. However, it really does make a lot of people feel at least a little bit more wary about what happens in 2019, and you're really starting to see that play out for the last couple of weeks. Remember, Stephanie, as you guys have alluded to in the past, the holiday shopping season, the holiday season in general, is generally viewed as a positive time for the market. So this has caught a few people by surprise here.
Okay, well, I want to put feelings aside or the methods in which the president uses aside. And, Bill, I want to talk about, is he going to achieve his goal? Because here's what the president tweeted today. It is incredible that with a very strong dollar and virtually no inflation, the outside world is blowing up around us. Paris is burning and China way down. The Fed is even considering yet another interest rate hike. Take the victory. Now, I might make the argument that we know the president does not want a rate hike. He hasn't wanted it for ages. And he has launched a full-scale banana circus in the last few weeks that has sent the markets spiraling with volatility. But is it working? Has he done enough damage? Has it created so much fear that he's going to get what he wants and he won't get a rate hike?
Well, you know, when Jerome Powell, what it was, 3 weeks ago at the Economic Club of New York, sort of hinted at that the fact that he may not be raising rates again, the market exploded. That was the last explosion, up 600.
And Trump sees that.
And sees, of course he does. He watches it, as Dominic says, it's a gauge of his success as a human being, as a president.
In October, Jerome Powell said the economy looks so great as far as the eye can see. 3 weeks ago, he hints that he's not going to raise rates. And it gets me thinking, is the president's method working?
No. Here's why the president's method isn't working. As you know, Stephanie, look at the bond market. The bond market always tells us more than the stock market. There has not been the bond market, and the liquidity in the credit markets is beginning to shut down. Beginning to freeze up. There's not been a single high yield deal yet this month. That if that holds, that'll be the first time in 10 years that there's not been a single high yield deal. Leverage loan market is freezing up. So the credit markets are reacting to this and beginning to shut down availability to credit. That is a harbinger of bad things to come.
That right there, our audience doesn't realize, was Bill Cohen's Christmas gift to me, because my true love in this world are the credit markets. All right, Felix, you say that the headline this week is not, will Jerome Powell raise rates or not, but it's his view of the economy.
Well, we know he's going to raise rates. He's raising rates on Wednesday. That is going to happen. You can take it to the bank. The question is really whether he's going to continue raising rates in 2019. That's more up to him. He hasn't decided yet. But what we are seeing is what we saw last week was record weekly outflows out of equities into cash, more than at any week since 1992.
This is the first time in a decade JP Morgan has recommended shift into cash.
Right. People are really scared. No one wants risk anymore. No one wants credit risk. No one wants equity risk. People are pulling back, and there's no greed in the markets.
Okay, but I know we have to go, but Why are they scared? And Dom Chu, just really quickly, why are those people scared? Because it was just a few months ago, people were saying sentiment from big business, small business, consumers, things are great. Everyone loves the economy. Where did this fear and panic come from?
So the fear and panic, well, I mean, it's not panic just yet. I mean, the markets aren't showing panic. The fear is there, not just from, the overall markets on credit, like you said, but also in corporate CEOs as well. The latest Chief Executive Group sentiment on CEO, basically survey of CEO sentiment, is at the lowest level that they've tracked since October of 2016, right before the election of President Donald Trump. It's been on a downtrend all year long. The issues are trade, interest rates, tariffs, a slowing economy, late cycle, all of that stuff is in play right now. Now, whether or not consumers and investors start to catch up to that slowing in sentiment from CEOs remains to be seen. That's one thing that we'll be watching in 2019. Although I will say as a bright spot, Stephanie, CEOs do still plan on hiring more people next year than they did this year.
Well, when you get the massive corporate tax cut that they did, they do have the money to do that. Dom, thank you. I just think briefly about what Dom said right there. In play, trade war, interest rates, as he said, tariffs, all of this in play. S&P down 2.7% on the year. I think back to Laura Lee Trump on Fox a few weeks ago, who said everyone knows it was President Trump who turned the economy around. Laura, please join me. I'd love for you to help me understand exactly what you meant by that, because I don't fall into that everyone knows category.
Hey there, I'm Chris Hayes from MSNBC. Thanks for watching MSNBC on YouTube. If you want to keep up to date with the videos we're putting out, you can click subscribe just below me or click over on this list to see lots of other great videos.